Good afternoon. You're watching Business World Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Monday. All right, the index ending Monday, little change, but that's better than how it fared for the most part of the week's first session. Local shares sinking back to 6,900 for majority of the trading day, but reverse track an hour before close as banks rallied. The PSCI capping off Monday up less than 0.1%, really maintaining a hold at 7,000, now at 7,024.48. Index unchanged. That's despite the filing of another version of Bayanihan 3 worth 420 billion pesos. That, of course, is aimed at helping revive the ailing economy. You have Speaker Lord Alan Velasco filing the measure. He says it will help cushion the blow for pandemic-hit businesses and deliver another round of cash support for the poor. But not much hope on that front. It seems you have Jonathan Ravelas of BDO telling Bloomberg, that markets are wary that if the expected further reopening of the economy does not take place, then this pending via the new stimulus package will have a limited impact. Adding to concerns, he says, is that inflation may just be an uptrend after that record 4.2% January print. The BSP, of course, for the most part of 2020, perceived to be doing the heavy lifting here to salvage the economy. They are expected to meet Thursday, and a poll of 18 analysts show that almost all project the Monetary Board to actually hold on to current rates. That's amid a spike in inflation that we saw last month. They expect changes in benchmark rates to happen either late this 2021 or come 2022. This is the central bank reserves its ammunition in supporting the economy. Rates already at record lows after the BSP slashed 200 basis points in 2020. But let's see how this bit of news might actually help lift sentiment moving forward. The palace has said that they expect vaccine coverage for 1.4 million health workers to be completed in a month's time. You have Palace spokesperson Harry Roque in a radio interview saying, this is a country expects over 5 million doses of shots via the COVAX facility. The facility, of course, pledged to deliver the jabs mid-February. The palace is expecting rollout to start as early as February 15, but no clarity really still as to when the vaccines will really arrive. So still in wait-and-see mode for that. But focusing on what transpired today among stocks, it was actually Ayala Land which contributed most to the gain here that we saw on the local bourse. That climbed 2% to 40 pesos and 75 centavos a piece. But the lenders, like what I mentioned earlier, leading the winners pack here. Metro Bank gaining the most, inching higher by 4 2/10% to 49 pesos and 45 centavos. Security Bank not far behind, advancing 3.5% to 133 a piece. There's also BPI in the green that is up 2 6/10% to 86 pesos and 10 centavos a piece. BDO also climbing by 1 9/10%. On the other end of the spectrum, it's a totally different story here for property players as they lag the rest of the bourse. Robinson's Land, the worst performer, shedding 2.5% to 19 pesos and 12 centavos a share. SM Prime also dipping 2 4/10% to 37 pesos and 45 centavos a piece. We'll discuss more of the office market here in the Metro and beyond later with KMC Savills Fredrick Rara. But for now, here are other stories from the corporate front. ICTSI is cautiously optimistic this year as it pins its hopes on vaccination efforts. Company Vice President Rafael Consing told the Philippine Star that their capex this year would reflect their cautious optimism, noting that vaccination campaigns would boost global trade. Meanwhile, logistics firm DHL Global Forwarding told Business World that it could help the government in importing COVID-19 vaccines. The company says it has the expertise in cold chain, inbound, and warehousing for the vaccine distribution. Now, expect one less food delivery service in the market. Lala Food has announced it will end operations next Monday. Lala Food, which is the food delivery unit of Lala Move, started in 2018 with the company exploring the food delivery sector. Other players in the market include GrabFood and Foodpanda, all of which have seen a pickup in demand since the pandemic started last year. In a statement, Lala Foods said the company will now focus on its core delivery business with expansion plans in Manila and Pampanga this month. Lala Move says it is counting on strong growth for its courier business this year and more opportunities with its driver partners. Now, here are other headlines we're keeping our eyes on. The Agriculture Department is backing the push for a pork holiday among consumers amid the rising prices of pork products today. Agriculture Secretary William Dar says consumers may want to turn to other sources of protein, such as fish and chicken, while on pork holiday. Dar says the department is getting ready to supply pork at lower prices to help retailers and to stabilize market prices. The DA also vows to provide zero-interest loans to market vendors until prices stabilize. The DA will also be rolling out transport assistance for hog traders and loans for hog raisers engaged in the repopulation program. Now, the Energy Department has ordered power firms to carry out the no disconnection policy for poor households with electricity bills falling due by March. The DOE advisory says this applies to all unpaid regular bills and installment payments within the covered period. No details yet as to how long the no disconnection policy would run. President Duterte earlier expressed support for the no disconnection policy for lifeline consumers. The DOE, on the other hand, is urging consumers with the capacity to pay to settle their bills on schedule to help manage the flow of cash in the energy supply chain. And as promised earlier, we'll take a deep dive into how the Metro's office market fared in the last quarter of 2020 and its prospects coming into 2021. To discuss that, we have Fredrick Rara, Senior Manager for Research and Consultancy of KMC Savills. Good afternoon, Fredrick.
Hi, good afternoon. Thank you for having us.
All right, so based on your report here, vacancy rate reached 10% in the last quarter, at least in Metro Manila. Which markets were the biggest loser here, and were there any surprises or those that actually bucked the trend?
Actually, the main culprits are still the same. We have Ortigas Center, Quezon City, and we did expect a little bit of new vacancies from the Bay Area because of the POGO sector exiting. But I think the biggest surprise really is from Alabang CBD, which we didn't really expect that there was a lot more exposure to the POGO sector. So that sub-market went into double digits just last quarter.
Okay, so much of what you mentioned earlier really hinging on what happened in the POGO market. So far, the latest on that one, of course, you now have a temporary restraining order on the franchise tax for POGOs, which is at 5%. But is that really just delaying the inevitable? So what's the outlook here, especially when it comes to office take-up coming from POGOs?
I think for now, it's safe to say that the POGO sector won't exit 100% in the market. What we are seeing is it's really on hibernation given the COVID pandemic, and we do believe that they're going to exit most of their office occupancy outside of Metro Manila. So for the most part, POGOs will still be a significant portion of the economy, maybe until 2022. So what we're seeing is the biggest risk really is on the regulatory side, and any changes in the administration could, increase that risk in terms of regulation.
Okay, Fredrick, one interesting thing that you mentioned, you expect POGOs to at least exit Metro Manila and try to take in at least or enter other markets here. Any possible markets here that you're looking at outside NCR for POGOs?
Now, what we're sure so far is somewhere south in Cavite, and there are also exploratory talks in, let's say, the areas of Laguna. But again, we've had a few POGOs exiting certain markets, let's say Cebu or Clark, and we're not discounting that they will still remain there. But again, the big players are what we're currently focusing our monitoring. Most or all of the small players have already exited the market. So it's really a big player market right now.
Okay, so what's one thing for sure, at least from your standpoint, is that's not going to be 100% exodus here coming from the sector. But let's move on.
Sorry,
All right, Frederick, were you able to hear my last question? I think
sorry,
we have a technical
I lost
difficulty.
you there.
All right. So going back to my question earlier, we are expecting, or this KMC Savills is projecting, there's going to be 1.1 million square meters of office space in the pipeline. What's that going to mean for the market? Does this mean more pressure come 2021?
Well, definitely it will add more pressure if
All right, and you're still watching Business World Live here on News. I'm Jes Delos Santos, and we still have on the show Fredrick Rara, Senior Manager for Research and Consultancy of KMC Savills. Sorry about that, some technical difficulty here. But going back to my question earlier, again, KMC Savills projecting 1.1 million square meters of office space in the pipeline. What might this mean for the market? More pressure ahead.
Yeah, I think that's certainly what will happen if 100% of this incoming pipeline will be completed by either 2021 or 2022. We are still feeling a lot of construction delays, so maybe 300 to 400,000 square meters of that might slide to 2022, and the 2022 pipeline can slide to 2023. So again, that's a big if. Technically, we do think it's more or less a benefit for now, given that we don't have as much demand in the market. And sliding this new office stock could really alleviate the vacancies that we're currently experiencing.
Okay, so somehow the delays should somehow soften the blow here for the office market. But like what you mentioned, with a lot of these projects expected completion in 2022, should we be expecting the same storyline here come next year?
Well, hopefully by the second half of 2021, we could have a recovery from all this fiscal stimulus. But again, on our side, we're trying to be very conservative on our outlook. And yes, maybe we could still see the same, um, you know, uh, scenario by the early of 2022.
Okay, now let's move on over to rental rates here. Average rental rates at 1,000 per square meter monthly. Makati has seen rates decline parallel to vacancy rates also rising. Do you see this worsening, and how pliable should landlords be when it comes to rates?
Well, for now, we do see, the pressure, even if it's a soft blow in terms of rents, we're still seeing that pressure overall in the markets that we're currently tracking. And for landlords, they've had a fight. I mean, from last year, but given that the scenario isn't changing, it's not improving, definitely seeing some rental discounts by this year.
But Frederick, lastly here, what are the possible boosts here for the office space market in the metro? What are possible catalysts here that could at least drive up, take up in the office market?
I think the number one key here really is if there are really big changes in your workplace strategy. For us at KMC, we've been pushing for a hub and spoke approach, wherein some markets like Quezon City or Alabang can benefit from an exodus of headquarters from, let's say, BGC or Makati. But then again, the real catalyst really here, I mean, the base point, the foundation is if we have this pandemic in control, if we have vaccinated or inoculated much of the population, wherein corporate leaders can say, okay, we can definitely go back to the office.
Okay. Thank you very much for your time this afternoon. Thank you very much, Fredrick Rara, Senior Manager for Research and Consultancy of KMC Savills.
Thank you.
And those are the biggest news this trading day, February 8, 2021. Catch Business World live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News.